there's a lot of buzz this morning about the future of one of the best-known American retailers. Macy shares shot up on news of a buyout offer for an investor group. I want to bring in Mary Ross Gilbert, who is a retail analyst with Bloomberg's intelligence team, and she joins us with her perspective on this. Great to have you with us. I guess, Mary, the first question I have is, what would have put Macy's in a position to be a target like this currently? What's going on with the business that would bring something like this about?
Well, this year we saw some weakened performance, going against last year in 2021 when post-pandemic we had a big increase in retail sales. So this year their comp sales are running down around 7%. And of course the stock didn't act very well as a result. And so I think that's what really created investor interest here, especially when you look at the real estate holdings that this company has. And in our valuation, we were coming up with a fair market value somewhere around close to $8 billion. So if you consider that and you consider the bid that's out there right now for $21 a share, that essentially values the company on a total enterprise valuation basis somewhere around $8.5 billion. And so if you extract the real estate and then you add incremental rent, so that assumes you sell the real estate and then Macy's is going to rent it back, you're almost getting the retail business for free. We come up with a multiple of about 0.5 times pro forma EBITDA in that instance, and that's earnings before interest, taxes, depreciation, and amortization. That's the typical metric that most investors, particularly with transactions, look at.
So, and I was looking at your note this morning, so if this group of investors gets this done, that I'm not going to put words in your mouth, but it sounds like they'd be, from your vantage point, getting a pretty good deal just based on the value of the real estate. What would happen, though, to a business like this out of, I guess, the public market spotlight? Would you just find more ways to unlock value in the real estate, or would there be an opportunity here to take a very well-known long-term retailer and put it in better shape to be ready to compete in the future?
I think it could be a combination of both. If you look at the investor group, it includes Ark House and Brigade. Brigade has a history of investing in retail and consumer brands. So they would probably focus on improving the overall operations and kind of bringing them into the future more. And that's something that Macy's and the management team has already been working on, is transitioning it to be more relevant today. And that includes operating stores that are smaller and off the mall, among a number of other initiatives, including their private label business, their marketplace, the media business. So there's a lot of different aspects operationally. Then, of course, you have this very valuable real estate portfolio, including their Herald Square property, which is, it had been in the press valued at somewhere around $3 billion. In our analysis, we're using $2 billion. So maybe our number is low. But the point being is that there is an opportunity. And if you look at the other partner in the investor group, that's Ark House, and they've indicated on their website that what they look to do is take mispriced real estate assets and realize that value. And that's something that we've always noted in some of these department stores, is that there is real estate value here, and that's why we've always focused on the real estate.
I guess my final question, Mary Ross Gilbert joining us from the Bloomberg Intelligence team to talk about this news with Macy's. There was even talk some years ago about them possibly coming together with Hudson's Bay, a retail story many Canadians have watched for so many years, and obviously, figuring out what to do with that business and the real estate part of it too was something we've talked about many times. There's a lot of economic uncertainty right now, and I guess people are trying to figure out what the consumer landscape is going to look like over the next year and a half. Is there the possibility that some retailers that aren't quite ready for the future are going to be challenged in this environment going forward?
Undoubtedly. I mean, yes, the consumer is challenged, but the consumer is not dead. I think the consumer is still pretty resilient overall, especially when you look at employment. Employment is very strong. And if you look at wage growth it's been matching about inflation, so they're okay. But clearly promotions make a difference, and I still think we have the secular trend away from the mall and operating these large stores, because I think the inline stores, the stores that are sort of the specialty boutiques, are outperforming the department store within the mall, and then of course you have the off-mall retailers. So I think you are going to see continued evolution in the retail space, and probably with mall properties. If it's, a B or C and clearly a D mall, I think that's where you see shrinkage. But the A malls continue to do very, very well, and the valuations there are holding up also very well.
All right. Well, we appreciate the insight. We'll continue to watch that story with Macy's. Mary Ross Gilbert from the Bloomberg Intelligence team joining us.